So the first thing we want to do is jump onto our trading view and load the stochastic RSI indicator. So in order to do that, you want to come up to your indicator section, which is this button over here. You want to click on that, and under the search column, you're going to put stock, and you'll see the stock RSI pop up over here. Now what you want to remember to do is star it so it can fall under your favorites, so it's easy to find going in the future. Now once you've clicked on this button, you will then see how your RSI pops up. Now it's a very simple indicator. It may look a little bit overwhelming, but it's very easy. It is something that just goes up and down in a certain radius of 0 to 100. And you can just see how it just fluctuates like a wave. Now the important thing to take is whenever this is over the 80% mark, which you'll see on the right, this is now considered to be overbought. It's an area now where there's been too much buying, and it's actually an area where you should be focusing on selling. Then you got the opposite side, where when it's below 20%, it is now considered oversold, where there's been tons of selling, lots of panic in the market, and you shouldn't be worried about panicking out, more looking at where can I buy. Now if you look at this indicator to the actual chart, you'll soon see the power of it. You could see that in this area from the bottom, we started getting a lot of green candles. The market started accelerating up in one straight line. And then on the RSI, you could see we came from an oversold position all the way up to overbought. And what happened after that? We started getting way above the 80%. The market started to slow down and it started to reverse, showing you that this was getting too hyped up. There was too much buying. There is selling pressure coming at some point. And if you look previously at the data here as well, you'll see the same thing. From this area over here, we were overbought. We then trailed down, started to sell off, and you can see how the RSI made its way down. And if you go through all the previous data, you'll see how powerful it is. It's teaching you when the market is really run by greed right now, don't jump in because it's a trap. You could see over here how this shot all the way up to the oversold. We had really strong green candles. This would have said, don't buy. We have too much buying right now. And all of a sudden the market would reverse. Now it would come down to an oversold area where you should be buying the fear, getting into the market. You'll be looking to add positions over here. And all of a sudden from that, the market then went up. And look how beautifully the market follows the RSIs. So what you're focusing here is you can see that there's two lines. And ideally what they say is when these lines cross each other is when you should start making the decision. I use it similar, but not really. What I actually do is when we get to these areas over here, I am now focused on either buying or selling. So what I mean by that is as soon as we go over the 80%, I am prepping to sell. So I dollar cost out of the market. I start selling a little bit every few hours or every day or two, and I start getting out of the market at that point. It doesn't matter if I catch the complete top or not, I know I'm selling in the right phase. And it's the same with buying. Because if you see over here, price came down here. We then started hitting the oversold. The price went slightly lower. It doesn't give you the exact area on where we're going to bounce, but it tells you you're in the right zone where you should be focused on buying. So what I do is as soon as we hit below the 20%, I started buying. And I bought a little bit more, and I bought a little bit more, until we started exiting the 20%. Then I stopped buying because my buys now have to be in. And then all of a sudden the market started to take off. And as soon as we got to these areas, I was making sure I was out. Now, the main thing to focus about this indicator is no-go zone, if you want to call it. Somewhere where you shouldn't be buying or selling. You mainly focus on these two areas. Now, something that can be quite confusing is all the different time frames. And I want to simplify this for you. Trading is very simple, actually. The only difference is you get different types of traders. You get guys that want to trade in the day and they only want to make money for the day. So they don't care what the market does tomorrow or in the next week. They just want to know what is happening today. So what they do is they create time frames for you for that. And the one that I use for daily is the 1 hour. So what happens here is this RSI will be telling me completely something different than other time frames. And reason being is because you're either zooming in and you mainly focus on the area or the time frame that you want to trade on. So what I use for hourly is my daily trading. I only want to know what's going to happen today. I don't care what happens tomorrow. So if I jump on this, you can see very clearly that this now is showing me an oversold position. It's showing me now that the market is now an oversold short time frame, and we can expect at some point we're going to get some buying power. So I'm looking to buy in these areas of the oversold, and I'm looking to sell in the areas of the overbought. Then we'll jump to the 4 hour, the one I was on previously. This is something that I'll use for 2 to 3 days data. I only want to trade once over the next 2-3 days. That's where the 4 hours is powerful. So it's only going to show me data relevant for that time frame. And it's the same as you make your way up. 8 hour is every 5-day trades. 12 hour, I'm looking for the next week and a half. Daily, I'm looking for the next 2 weeks, 3 weeks. So as you go through all the different RSIs, you'll see they will be different. And you want to match which RSI is with your strategy right now. I can only trade once a month? Fine. Then use the daily. Use the RSI that is equipped for what you need it for. And then it will give you a very clear picture. And you can still see on every single one of these, if you focused on buying on the oversold, you'll be buying in this area. Now it's overbought, you'll be selling here. And you can see it doesn't matter which time frame or strategy that you use, how powerful this tool is. You just have to make sure that you are matching the right RSI or the right time frame to your specific strategy. It looks quite simple, right? It is that simple, and it is that powerful. This is going to stop the emotion, and it's going to get that mind of yours to stop overrunning. Your mind's going to tell you to buy. The RSI is going to tell you to sell. Your mind's going to tell you to sell. The RSI is going to tell you to buy. We have to think completely different to the rest of the world. You have to become a machine, become a system that is purely built for you. And that's how you become a successful trader.